2025 might be the year that we finally see mortgage rates drop. In this video, I'm going to share with you what's happening in the economy right now, what are the major banks suggesting might happen, and what my predictions are when it comes to house prices because of interest rates and what that might mean for you in your investment portfolio. If you guys are interested, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now it is a very exciting time. I'm not going to make too much of a mention, but we're going on a national tour and I want to come and see you in your city. So register now so that you're on the wait list for when the tickets drop, you can go ahead and purchase them so you avoid the disappointment of missing out for a whole year. We may never run one of these again, but I really wanted to come out and see you in person. So we're going to Sydney, Melbourne, Brisbane, and Perth, and you can use the link in the description box below to go and register, and that way we'll know who's serious about this and who actually wants to attend. I'm so excited. We're in the planning stage of exactly what's going to happen at this event, but before we get to the event, let's jump into this video. Now, every year we have a lot of predictions, we have a lot of forecasts, whether it's economists, whether it's people on the street, whether it's myself on YouTube or any other TikTok creator. They might come out and say, hey, look, I think this is what's gonna happen, or I think this is what's gonna happen. So I thought, let's go and address what's happening in the economy right now. Let's lean on some economists and people way smarter than me, and we can then decipher what we need to do in terms of our strategy and what we could actually plan for as well. So what's in store for the Australian economy in 2025? Here's what to look out for this year. And this is by The Kook, and he's very entertaining if you don't follow him on Twitter or X. Now, 2024 finished with mixed reviews for the Australian economy and markets. There were some excellent trends, some concerning events, and a range of issues somewhere in the middle. Here's what happened and what to look out for in 2025. Economic growth was weak in 2024, held back by weak consumer spending and aided, thankfully, by a lift in government spending. That said, bottom line GDP was hovering around 1%, its weakest point since the early 1990s recession, outside of the COVID pandemic episode. Inflation fell sharply, ending the year within the RBA's 2 to 3% target zone, which helped to see a lift in real wages. The good news is that inflation problem has been beaten. Now, according to The Kook, he has believed that interest rates should have cut like a few months ago. I was in the same boat as well. Now we're here where it's within the target range for the RBA, but I'm not sure that they're at that point to cut yet. Against all expectations, unemployment remained close to a 50-year low, a few ticks above or below 4%, a wonderful achievement. Australian share prices hit a record high, and even though there was a bit of a pullback in the final weeks of the year, the ASX 200 ended the year up 7%, which builds to a return around 11% when dividends are included. Growth in house prices eased, with prices flat or down in Sydney, Melbourne, Canberra, Hobart, Darwin, while price growth in what were the boom cities slowing. Against the expectations, the RBA had left interest rates unchanged at a 13-year high of 4.35%. So let's figure out where are we headed to now. The economy is set to register a moderate pickup in economic growth in 2025. Further growth in public spending will assist the expansion, while a recovery in household spending depends on the RBA delivering a series of interest rate cuts. Business investment is expected to recover as firms ramp up capital expenditure on AI, technology, and other machinery and buildings. There is also likely to be a lift in dwelling investment as housing construction cycle turns solidly positive. The good news is set to continue for inflation, which should remain around 2.5%. Low inflation around the world will be imported into Australia, and from inflation outlook, lower growth and moderate wage growth will help keep inflation on target. The good news on unemployment is likely to be tarnished with a weaker jobs market in store for the year ahead. That said, the lift in the unemployment rate will likely remain around 4.75%. I had gone out on this channel and said time and time again, the RBA will factor unemployment as a really key player. So the fact that we didn't see it tick up, which I thought it would towards the back end of 2024, is largely the reason we haven't seen interest rate cuts. And when we look at what the economists at these banks have been suggesting, that has been a big factor as to why we haven't moved, despite seeing so many economies around the world cutting interest rates. Now, the Australian share prices are set to have a down year, driven mainly by what is looking to be a pullback in the US stock market. After several very strong years, US stocks are set for a pullback as the Trump administration embarks on a series of policy upheavals, including higher tariffs, savage cuts to government spending, tax changes, and widespread deregulation. Fewer interest rate cuts from the US Federal Reserve and the risk of a late 2025 year interest rate hike will dampen the stock market, including Australia. So it's looking like a bit of a mixed bag where we might have asset prices fall, but we might have a healthier economy and we might have interest rates start to cut, but won't really kick off until 2026. Now, all of this goes out the window if unemployment goes to crap, and we technically are already in a per capita recession, but if we see a slowdown in immigration, we will definitely see those effects. I made a video about what David Kochie's thoughts were around the recession. You should definitely go check it out here. It's one of the most popular videos so far in the last couple of weeks, so you should definitely go check it out. Now, millions of homeowners will be hoping the trend of the Reserve Bank of Australia announcing interest rate holds will be left behind in 2024. The official cash rate has been on hold at 4.35% since November 23, and it has pushed some mortgage holders to the brink. A poll of hundreds of Yahoo Finance readers found 23% would be forced to sell their homes if there isn't a rate cut at the first RBA meeting of the year, which is February. Now, I will go on to say I don't think that number is going to actually be 23%. Most people would do everything possible before they lose their homes. I know there are people right now struggling and have been struggling for the last couple of months, but we're almost there. You might be in a position where you're like, okay, I need to cut on the Uber Eats or the alcohol, the cigarettes, do all of that. Hold on to what you can, because once it goes and you see interest rates cut, I believe we're going to see the next leg up in pricing. And I don't care what people have to say in terms of, oh, well, there's a bubble here and there's a bubble there. At the end of the day, it comes down to who are you speaking to, who are in your circles, and are you basing this on your own emotions or data out there? Because data suggests there are a lot of people sitting on the sidelines, cashed up, but just don't have the borrowing capacity. So as soon as we see interest rates cut, there's going to be a hell of a lot more demand, and we already know we have a massive supply issue. If you guys want an update on the supply issue with housing and if there's any more properties being built, definitely leave me a comment down below saying housing supply, and I'll make that video for you guys. So when does the CBA, ANZ, NAB, and Westpac think rates will cut? NAB was the first Big Four bank to tip that the official cash rate would be on hold at current levels until May 2025, which would only be a couple of months from now. They were followed by Westpac and ANZ later joining the pack. So how far do they actually think it'll cut? So CBA comes out and says the first cut will be in Feb 25 with 4 cuts to bring the cash rate down to 3.35%. Westpac says the first cut is in May, and they're actually going to have 4 rate cuts and they're going to bring it to 3.35. So the one thing they agree on is 3.35. NAB says the first cut is in May, along with ANZ. So Westpac, NAB, and ANZ all on May. And NAB is suggesting only 3 rate cuts to bring it to 3.6%, and ANZ is saying only 2 cuts to bring it to 3.85%. Now, for each $1 million worth of debt, if you want to figure out how much of a saving this would make, all you have to do is say $1 million times 1%. And that tells you that 100 basis points will save you $10,000 on average per year, which is huge because that's like $200 every single week. And in this case, if you're going with the prediction of what CBA and Westpac are suggesting, they're saying this year you could probably save an extra $10,000 because the cash rate will drop by 100 basis points. And if you think about it, if you have an extra $10,000, that might mean the extra holiday, but for a lot of people, that might mean that they are able to now service the loan to be able to purchase a 3rd or 4th property. And that is what I'm saying, is investors want to buy more. They understand the game. They've seen their investments go up while interest rates were low. They've seen their investments go up when interest rates were high. And they've understood that this is more a supply and demand issue rather than just saying, oh, there's a recession, so the economy's crap, that means asset prices need to fall. The inverse can also happen, where the economy could be flourishing and doing really well, but you could see house prices actually drop as well. I'm of the firm belief that we will definitely see rate cuts this year. How many and how frequently will really depend on other factors like inflation really coming under control. And to be honest, if you were to zoom out, for someone who holds a lot of debt, I would have loved to see interest rates drop. But at the same time, I know that if we drop interest rates by say 1 cut or 2 cuts, and we suddenly see inflation start going up, the most demoralizing thing would be to see interest rates hold and then increase after that. And that is what we're trying to avoid here. We saw a similar thing happen in the 1970s and 1980s in the US economy, where they cut interest rates far too quickly and we saw inflation pop back up. And that is what we're trying to avoid here. So I know that there's some people in pain. Even for myself, the cash flow hasn't been looking great. But if you think about the bigger picture and you're investing properly, you have a strategy and you have an emergency fund, you should be able to get through this entire period really, really well. You need to be positioned with strength, because if we do see interest rate cuts, then we will see a lot more demand in this market, which is why you need to have the right people in your team. If you need our help, then you can go ahead and go to searchproperty.com.au. We help everyday Australians like yourself to go out there, purchase investment properties while not having to be involved in the research and the negotiating and making sure it's not a dud investment and it's in the right location at the right price. So we can help you out with that. If you guys have enjoyed this video, subscribe. And if you haven't already, like the video, and I'll catch you guys in the next one. Thanks, guys.